Hello, everyone. My name is Yaman Tashtabar, and I bring you daily updates on Tesla, tech, and the markets. Welcome to Tesla Live. Let's get started. Markets are down a little bit on Dow Jones, down 0.4%, NASDAQ up 0.3%, S&P 500 is flat. Advancing issues are about 40%, declining issues outweighing advancing issues by a little bit. More stocks are making new highs today than new lows. And you can see some of the technical indicators here. 68% of stocks are above their 50-day simple moving average and 44% above the 200-day average. So shorter term, a little bit more bullish than the longer term technical situation right now. Nvidia, Tesla, and Broadcom are the highest traded stocks today. Let's look at the daily heat map. S&P, Nvidia is up 1.6%, Broadcom is up 2.3%, AMD is up 2.3%, and Micron is up 3%. Tesla is down 2.5%. GM and Ford are down 4.5%. This is likely because of the steel tariffs that doubled, and we're going to look into that in a little bit. Meta is up 2%. Google is down 2%. Oil stocks are up. Some geopolitical tension between Ukraine and Russia. Banks are down. Industrials are down. And materials are down. All right, let's move on to our daily article of the day. Wall Street mixed after Trump's steel tariff threats. This is a Reuters article by Kanchana Chakravarti. Wall Street's main indices were mixed on Monday after President Trump said he plans to double tariffs on imported steel and aluminum, fueling more uncertainty around U.S. trade policy. Trump said late on Friday he plans to increase tariffs on imported steel and aluminum to 50% from 25% starting on Wednesday, just hours after he accused China of violating an agreement. Shares of U.S. steel companies rose with Cleveland Cliffs jumping 24%, Nucor up 9%, and Steel Dynamics 10% higher. However, shares of automakers fell. Ford was down 4%, GM was 5% lower. It's the continued uncertainty, not knowing whether the trade war is on or it's off, said Sam Stovall, Chief Investment Strategy at CFRA Research. Something new gets added, something gets postponed. So essentially, it is that uncertainty reigns. The increased levies risk deepening Trump's global trade war. Give me 1 second, please. 1 second. Sorry about that. All right, let's continue. The increased levies risk deepening Trump's global trade war and dousing enthusiasm in markets stemming from the US president's softer trade stance that drove a recovery in risky assets last month. A temporary relief on some levies on China and a rollback of steep tariff threats on the European Union, along with the strong earnings and improving economic picture, helped the benchmark S&P 500 log its best monthly performance in 18 months in May. Also fueling risk-off moves in global markets, Kiev struck some of Moscow's nuclear-capable bombers on Sunday, renewing concerns around further escalation of the war. 7 of the 11 S&P 500 subsectors fell, with consumer discretionary declining the most with a nearly 1% fall. On the flip side, energy rose over 1%, tracking a rise in oil prices. U.S. listed energy stocks advanced after producer group OPEC Plus kept output increases in July at the same level as the previous 2 months. Most mega-cap and growth stocks fell, with Tesla down 3% after reported lower monthly sales for Portugal, Denmark, and Sweden. Google parent Alphabet also lost 2%. The ISM survey showed U.S. manufacturing contracted for a third month in May. Suppliers took longer to deliver inputs amid tariffs, potentially signaling looming shortages of some goods. We're going to dig a little deeper into the ISM survey. Dallas Fed President Lori Logan said that with labor market stable, inflation running somewhat above target, and outlooks uncertain, the central bank is keeping a watchful eye on a broad range of data to judge what response might be needed and when. Focus will be on comments from Fed Chair Jerome Powell later in the day as he presents opening remarks before the Fed International Finance Division's 75th anniversary conference, 1 p.m. Eastern. So that's going on right now. We're going to look for headlines later on. Traders currently see at least two 25 basis point cuts by the end of the year, according to data compiled by LSEG. Investors are also looking ahead to a crucial non-farm payrolls report on Friday to gauge the U.S. labor market strength amid tariff volatility. All right, let's continue. We're going to dig into steel tariffs, and then the ISM report, and then construction spending. Now we have some news about China's automotive market, an exclusive article by Reuters about Elon's decision to kill the $25,000 vehicle, and maybe a couple of macro things after that. Trump says he plans to double steel aluminum tariffs to 50%. US President Trump said on Friday he planned to increase tariffs on imported steel and aluminum to 50% from 25%, ratcheting up pressure on global steel producers and deepening his trade war. We are going to be imposing a 25% increase. We're going to bring it from 25% to 50% the tariffs on steel into the US, which will even further secure the steel industry in the US, he said at a rally in Pennsylvania. There are way more people. I think it's like an order of magnitude more people that work in industries in the US that are worse off because of higher steel prices than the number of people who work in steel industry. So this is a really interesting strategy. Curious to see what the fallout is going to be in the coming months. The doubling of steel and aluminum levies intensifies Trump's global trade war and came just hours after he accused China of violating the agreement with the US to mutually roll back tariffs and trade restrictions on critical minerals. Trump announced the higher tariffs just outside Pittsburgh, where he was talking up an agreement between Nippon Steel and US Steel. Trump said the $14.9 billion deal, like the tariff increase, will help keep jobs for steel workers in the US. He later posted on social media that the increased tariff would also apply to aluminum products and that it would take effect on Wednesday. Shares of steelmaker Cleveland-Cliffs surged 26% after the market closed as investors bet the new levies will help its profits. The announcement drew harsh reactions from U.S. trading partners around the world. Canada's Chamber of Commerce quickly denounced the tariff hike as antithetical to North American economic security. Unwinding the efficient, competitive, and reliable cross-border supply chains like we have in steel and aluminum comes at a great cost to both countries, Candice Lane, president of the Chamber, said in a statement. Canada's United Steelworkers Union called the move a direct attack on Canadian industries and workers. The European Commission said on Saturday that Europe is prepared to retaliate. This decision adds further uncertainty to the global economic and increased costs for consumers and businesses on both sides of the Atlantic, a European Commission spokesperson said. The EU is prepared to impose countermeasures, including in response to the latest US tariff increase. Australia's centre-left government also condemned the tariff increase, with Trade Minister Don Farrell calling it unjustified and not the act of a friend. Yeah, it's really interesting strategy that the US is alienating its allies, or I guess Trump administration is alienating US allies ahead of escalating geopolitical tensions. Trump spoke at U.S. Steel's Mon Valley Works, a steel plant that symbolizes both the one-time strength and the decline of the manufacturing power as the Rust Belt's steel plants and factories lost business to international rivals. Closely contested Pennsylvania is also a major prize in presidential elections. The U.S. is the world's largest steel importer. excluding the European Union, with a total of 26.2 million tons of imported steel in 2024, according to the Department of Commerce. As a result, the new tariffs will likely increase steel prices across the board, hitting industry and consumers alike. Steel and aluminum tariffs were among the earliest put in effect by Trump when he returned to the office in January. The tariffs of 25% on most steel and aluminum imported to the US went into effect in March. And he had briefly threatened 50% levy on Canadian steel, but ultimately backed off. Under the so-called Section 232 National Security Authority, the import taxes include both raw materials and derivative products as diverse as stainless steel sinks, gas ranges, air conditioner, evaporator coils, horseshoes, aluminum frying pans, and steel door hinges. The 2024 import value for the 289 product categories came to $147 billion, with nearly two-thirds aluminum and one-third steel, according to Census Bureau data retrieved through the U.S. International Trade Commission's data web system. By contrast, Trump's first two rounds of punitive tariffs on Chinese industrial goods in 2018 during his first term totaled $50 billion in annual import value. Yeah, so it's multiple times higher now. Okay, let's go to the ISM report. Let me check if there's any questions, comments. You can leave a question. This is a live stream on YouTube and on X as well. And also after the live stream is over, you can leave a question or comment below the YouTube video. US manufacturing remains subdued in May, delivery times lengthening. So this was, I thought, pretty interesting. Because because of the things that you're going to read in the article, we're going to listen to in the article. But 4 months in a row now, ISM is showing contraction in the manufacturing sector and also higher prices. So look for the PPI figures. US manufacturing contracted for a third straight month in May, and suppliers took longer to deliver inputs amid tariffs, potentially signaling looming shortages of some goods. The ISM said on Monday that its manufacturing PMI edged down to a 6-month low of 48.5 last month from 48.7 in April. So these are May figures. So these are some of the first May figures that we're getting. Sorry, my bad. This is an April figure. So 48.5 in March to 48.7. No, scratch that. This is May. 48.5 in May from 48.7 in April. So this is interesting because in May, stock markets surged back up. Throughout the month, we had a V-shaped recovery on the stock markets. And now we're starting to see the impact on the real data. And the ISM manufacturing is showing still low, a 6-month low in May, even lower than April. A PMI reading below 50 indicates contraction in the manufacturing sector, which accounts for 10.2% of the economy. The PMI, however, remains above the 42.3 level that the ISM says over time indicates an expansion of the overall economy. The economists polled by Reuters had forecast the PMI rising to 49.3. The survey suggests the manufacturing, which is heavily reliant on imported raw materials, had not benefited from the de-escalation in trade tensions between President Trump's administration and China. So this is the critical takeaway right here. The survey suggests manufacturing, which is heavily reliant on imported raw materials, had not benefited from de-escalation. Economists say the on-again, off-again manner in which the import duties are being implemented is making it difficult for businesses to plan ahead. Another layer of uncertainty was added by a U.S. trade court last week, blocking most of Trump's tariffs from going into effect, ruling that the president overstepped its authority. But the tariffs were temporarily reinstated by a federal appeals court on Thursday. The ISM survey supplier deliveries index increased to 56.1 from 55.2 in April. A reading above 50 indicates slower deliveries. A lengthening in suppliers' delivery times is normally associated with a strong economy, but in this case, slower supplier deliveries likely indicated bottlenecks in supply chains related to the tariffs. In April, the ISM noted delays in clearing goods through ports. port operators have reported a decline in cargo volumes. The ISM imports measure dropped to 39.9 from 47.1 in April. Production at factories remains subdued, while new orders barely saw an improvement. The ISM's forward-looking new orders sub-index inched up to 47.6 from 47.2 in April. Its measure of prices paid manufacturers for inputs eased to a still high 69.4 from 68.8 in April, reflecting strained supply chains. So this is the other important takeaway right here. Prices paid by manufacturers for inputs eased to a still high 69.4 from 69.8 in April, reflecting strained supply chains. Let me look up one thing real quick. Okay. All right. So prices paid much higher. 69.4, 69.8. These are much higher than 50. That shows increasing numbers. So PPI is going to be reflected. But again, manufacturing is a smaller piece of the economy than services, and but still impactful. Factories continue to shed jobs. The surveys measured manufacturing employment nudged up to 46.8 from 46.5 in April. The ASM previously noted that companies were opting for layoffs rather than attrition to reduce headcounts. So that's the other primary takeaway here. So overall, not great. It's very stagflationary. That's what this is. May data. Now, further bad news on the macro front. US construction spending falls in April on weakness in single family housing projects. This also came out today. And as we're going to read, there were some revisions to previous data as well. US construction spending unexpectedly fell in April, weighed down by a declining outlays on single family housing projects amid higher borrowing costs and a rising supply of unsold homes. The Commerce Department Census Bureau said on Monday that construction spending dropped 0.4% after a downwardly revised 0.8% decline in March. So back-to-back months of drops in construction spending, downwardly revised in March. Okay. Economists polled by Reuters had forecast construction spending rebounding 0.3%, so much, much lower than the expected figure, 0.7% lower than the expected figure, after a previously reported 0.5% decline. So this was lowered by 0.5% decline to 0.8% decline. So that's construction. And the headline says slowdown in single family housing projects, which is the more important part of it in terms of economic outlook. Spending decreased 0.5% year over year in April. Spending on private construction projects slipped 0.7%. Investment in residential construction dropped 0.9%. With outlays on new single-family housing projects declining 1.1%. So that's a pretty material drop. And I don't see that changing anytime soon. I think this might be a new trend downward. Home construction is also being constrained by unsettled economic outlook amid President Trump's aggressive trade policy, including a recent doubling of steel and aluminum duties to 50% from 25%. New housing inventory is at levels last seen in 2007. That's pretty alarming as well. While the supply of previously owned homes is the highest in more than 4 years, leaving builders with limited scope to break ground on new projects. Outlays on multifamily housing unit dipped 0.1% in April. Investment in private non-residential structures like offices and factories eased 0.5%. But spending on public construction projects increased 0.4%. All right. Outlays on federal government projects shot up 2.7%. So single family construction is down. Federal spending, state spending, government projects are up. Um, we're kind of running too long today, so maybe I'll skip this one. But let's go through it quickly. Let's just read the summary here. Actually, I want the details. Okay. A, a growing controversy has emerged in China's automotive sector over so-called zero-kilometer used cars, vehicles. So this is the there's some claims that BYD is cooking the books and all that stuff. I don't really believe it, but let's see what this article claims. A growing controversy has emerged in China's automotive sector over the. By the way, the BYD cooking the books is claim is coming from Tesla Bulls. So, a growing controversy has emerged in China's automotive sector over the so-called zero-kilometer used cars, vehicles that have been registered but never driven, now flooding the second-hand market. The industry voices like Great Wall Motor chairman are speaking out, and this practice drawing criticism for distorting sales data, misleading consumers, and undermining long-term market stability. So, what I don't understand in this topic is how is this making Chinese automakers look better, right? So it might be lowering their inventory levels, but they're still having to push the vehicles at discount, whether they sell it as a new or used. But let's keep reading. Maybe we'll learn something. The core of the zero-kilometer used car phenomenon lies in a process where new vehicles are registered as sold, often to affiliated dealers or third-party platforms, and then resold as used cars despite having to little to no mileage. Like, I don't understand how this benefits the automaker, but this maneuver serves multiple purposes, helping automakers hit sales targets, okay, enabling dealers to offload unsold stock. I don't know how it does that, but and in some cases, taking advantage of subsidies or export policies tied to vehicle registration status. Okay, maybe that's part of the deal here, this last one. Analysts point out that this practice is closely linked to systemic challenges in the industry. Overcapacity remains a pressing issue, with national passenger car inventory reaching 3.5 million units in April 2025. Some manufacturers operate at less than 50% capacity utilization, prompting, this word is carrying a lot of weight here. We don't know how many. And then 3.5 million is like 1/10 of the market over there. So it's not that much. So I don't know why this is so alarming. I think the market over there um is like 25, 30 million. So this is just like 2 months or so of inventory. Okay. Additionally, intense price wars and the reliance on government subsidies, particularly in the new energy vehicle sector, have created conditions ripe for such opaque sales strategies. While these vehicles are often priced attractively, sometimes 30% below the original MSRP, buyers may lose months of coverage. They carry significant hidden risks. Warranties usually begin at registration, meaning buyers may lose months of coverage. Okay, I mean, they're getting a 30% drop in price. So some models also come with unpaid loans or unclear ownership histories. Again, the word some, exposing consumers to potential legal and financial issues. Market analysts warn that the long-term consequences go beyond individual transactions. Artificially inflated sales data can mislead investors, obscure market demand, and distort competition. For instance, second-hand prices for models like the BYD King have plunged 30 to 40% below their official list prices, triggering a domino effect across competing models and contributing to a broader collapse in price expectations. In response to growing concern, China's Ministry of Commerce held a high-level meeting on May 27 with key players, including BYD, Dongfeng, and used car platform Guazi. The discussion centered on tightening oversight of used car transactions and cracking down on fraudulent sales reporting. Officials are reportedly considering frameworks similar to US SEC's approach to channel stuffing, a financial manipulation tactic where companies overstate revenue by pushing excess stock into distribution channels. I mean, like this is the kind of claim that's being made by Tesla bulls, but if you just take the BYD car and a similar Tesla car and just compare them spec by spec and the price level, it's obvious which one the consumer is going to pick. So although there may be one or two cases of stuff like this, which every automaker really has, I don't think this changes the overall story that BYD is growing very rapidly across the world, even before they build global manufacturing capacity that they're going to need, and they're taking market share. And they're eating Tesla's lunch in Tesla. They're not allowed to compete in US, so they can't do it in US, but everywhere else they're doing it. So I don't really see how this article is material. But let's kind of push through this. Actually, hold on one second. Industry experts advocate a shift from short-term tactics, blah, blah, blah. Consumers are advised to scrutinize the listed market as almost new and compare them against official pricing to avoid being called off guard. A steep discount of over 30% could indicate the car is 0 kilometers use. Who cares? Opting for reputable dealers, okay. When price differences are marginal below 15%, experts recommend sticking with new vehicles to retain warranty coverage and peace of mind. The bigger picture, although some argue that the rise of 0 kilometer used cars is natural market response to oversupply, many industries see it as a dangerous shortcut. We and others have, we, Jung Jun, and others have called for a return to fundamentals, innovation, product quality, and consumer trust. Without systemic reform, reliance on these tactics risks eroding brand equity and fueling a cycle of price erosion and distrust. Yeah, I don't really see this as a major thing. Let's read about this one. So, an exclusive article by Reuters that was published 2 hours ago by Rachel Levy. Exclusive. Tesla executives question Musk after he denied killing $25,000 EV project, sources say. Some senior Tesla executives were alarmed last year when Elon Musk denied a Reuters report that the company had killed a planned all-new $25,000 EV that investors had expected to drive explosive vehicle sales growth, according to people familiar with the matter. Reuters is lying, Musk had posted on X minutes after the story published on April 5, 2024, halting a 6% decline in the Tesla stock. Tesla shares recovered some of the loss after Musk's post, but the stock was down 3.6% after market close. The executives knew that Musk had in fact canceled the low-cost vehicle, which many investors called the Model 2, and pivoted Tesla to focus on self-driving robotaxis, the people said. The company had told the employees the project was over weeks earlier, Reuters reported, citing 3 sources and company documents. Musk's post was so confusing to some senior managers that they asked him whether he'd changed his mind. Musk rejected their concerns and said the project was still dead, according to the people with knowledge of the matter. The executives' concerns, which haven't been previously reported, shed light on the company's struggle to deliver a low-cost mass-market EV, considered a core promise of the company. Some of the Tesla executives were unconcerned about Musk's ex-post, said people familiar with the matter. The automaker keeps its products plans flexible, one person said, to respond to market conditions. A year later, struggling with a dated lineup and falling sales around the world, Tesla has still not released the low-cost EV that Musk once called pivotal to the company's future. Neither Musk nor Tesla has explicitly confirmed killing an all-new model that investors and Tesla enthusiasts have long referred to as Model 2 because it would slot in below the current cheapest model in Tesla's lineup, the Model 3. On Wednesday, Musk announced that he's leaving his role as a special advisor to the US, blah, blah, blah. Weeks after Musk posted an Tesla published investor update assured Tesla's new vehicles, including more affordable models that will be built. We're still waiting for those. Instead of an all-new model, Tesla is working on stripped-down versions of the Model 3 sedan and Model Y compact SUV, Reuters reported in April. No pricing on those models have been announced, and the cars set to roll out in the first half of 2025 have been delayed. On Tesla's earnings call in April, engineering chief Lars Moravi said the affordable models would resemble in the form and shape the cars we already make. The key is that they'll be affordable, he added, and you'll be able to buy one. After Musk denied the Reuters report about killing the Model 2, executives questioned Musk about what the company should tell perplexed suppliers and investors. People familiar with the matter said. Some executives told associates the denial made no sense. Investors and the public would inevitably learn the truth, and worried it would hurt Tesla sales as buyers delayed their purchases to wait for the $25,000 Tesla that in reality it had decided not to build. Their concerns were not universally shared at the company. One of the sources familiar with the internal deliberations about Musk's public denial told Reuters that Tesla has considered a variety of strategies for producing low-cost EVs over the years. Gary Black, a Tesla investor who manages money for the Future Funds LLC, said he didn't view Musk as a denial at the time, noting that Musk often makes brief and abrupt comments and can be about anything. That said, Black told Reuters he recently sold his fund's position in Tesla. Some Tesla executives told associates they were worried that denying the Model 2 was dead could land Musk in hot water with the SEC for misleading investors. I don't think he cares. Musk had previously paid a $40 million settlement in 2018. Or another social media post. I don't think that's how it worked. I think Musk paid 20 million. Tesla paid 20 million. And then Tesla issued Musk some shares for some reason. Musk says he reimbursed Tesla 20 million, but then he got shares for it. So I don't know how that's called reimbursing. Musk's agreement with the SEC requires him to have his social media posts about certain aspects of Tesla, such as new business lines and forecasts about the company, first vetted by a lawyer. Musk despises the settlement, according to people familiar with the thinking, and has told associates he doesn't post anything that needs attorney approval. The same day Musk denied the Reuters report, he lifted Tesla stock again in after-hours trading with a post saying Robotaxi unveiled 8.8, a plan he had not widely announced to Tesla employees, said people familiar with the matter. The Hollywood-style debut of a two-door cybercab ended up being delayed until October and underwhelmed investors. Many investors long ago gave up hope for a transformational $25,000 EV that would juice sales. Instead, Tesla posted its first annual vehicle sales decline in 2024, and sales were down 13% in the quarter of 2025. It's looking like they're going to be down again pretty materially in the second quarter and then throughout the 2025 and then also in 2026. So Tesla just can't produce this vehicle right now. Their costs are too high. Their costs have risen. The employee costs have risen. Elon isn't getting paid anything right now. So even with that, the cost structure of the company is way too high to produce a $25,000 EV and in volume. So this is going to be on the back burner for a long time, I think. In April, Chinese automaker BYD outsold Tesla in Europe for the first time and is taking the global lead in affordable EVs. This is really key. Doesn't matter what Elon's compensation is. It doesn't matter what the interest rates are. BYD is pulling ahead, not only in China, but also in Europe and many other regions of the world. The only reason they're not doing it in the US is because the government is protecting Tesla. I don't know if that's a good thing or a bad thing, but BYD is already selling vehicles much less than $25,000, and BYD already makes more money than Tesla does, which the latter people don't realize the fact, but BYD makes more money today than Tesla. And on top of that, Tesla relies on BYD. Tesla is dependent on BYD for battery sourcing in Europe. So BYD's entry-level Seagull electric hatchback costs less than 10,000. There you go. In China and sells competitively for more than double that price in export markets. Yeah. So China is the least profitable market, and BYD is dominating. Now, with exporting into the rest of the world and building manufacturing capacity into the rest of the world, they're going to be making even more money. And people falsely think that BYD's cars aren't safe and stuff, but I think that's just maybe that was true 5, 10 years ago, not anymore. Just a final note on macro. We're going to skip this one. And final note on macro. Inflation is expected to increase from May to June. 2.4% CPI, 2.58% CPI year over year from May to June. We're going to get May numbers next week. June numbers in about 6 weeks. And that core PCE is expected to remain at 2.6, 2.7% for now. Core CPI is expected to increase from 2.8 to 3%. So this is a problem for the Fed. It's a problem for the Fed. Let's look at the markets. NASDAQ has increased a little bit to 0.3%. Dow Jones is still down 0.5%. S&P 500 is flat. All right. On that note, thank you very much, everybody. And I will chat with you all. We have a couple of comments. Steve says, hey, buddy, hello. And Adopt Dog, Sandra Munro giving the thumbs up to Slate is huge. Another 3 to 5 of those giving us gifts. All right. Thank you very much. And I'll chat with you all next time. Take care.